So when I see the volatility storyline, all I'm doing is looking against the previous pivot to try and figure out whether I've got value. So looking against this pivot, have I got value to buy this? No. I haven't got value to buy that, because at the end of the day, the value against that level is actually declining into that level. So therefore, it's fair on the short term. On a macro chart, I have value to buy it. Absolutely. I've got loads of value to buy this price, but it's not at that price. You understand? It's nowhere near that price. So in the short term, I can't buy the pivot here because the value against that pivot's not established. And it was a good decision not to, because it's just stopped you out, or it's just given you a break to the downside, hasn't it? 7 winners, 1 loser, guys. Simply trading level 2. Rejections against a volatility line. Unbelievable. How's that selling bonds doing? How did my long oil trade do against the Jacks or Ryan trade, guys? Pretty good, right? Against the Jack Ryan trade, we were short selling bonds at 129.13, you might remember. We've got all the way down to 128.20s. I think Reeve was on board that one. And we've managed to make ourselves nearly $1,000 on the swing. And as we go, there we go, it's 22. Let's see if we can get through the 20s. The buy on oil, well, we came off the 60s. We got up to high price of 95, 35 ticks on the oil as well, $350 on the oil, and well over $500 on the bond. That's $800 on 1 contract on oil and 1 contract on bonds on the last 2 Jack Ryan trades. Who doesn't love the Jack Ryans, guys? We all love the Jack Ryans, right? Crazy, 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 crazy good trade opportunities. Gotta love it, guys. You gotta love it. You've just bought the NASDAQ at those bottom edges. You've just seen the NASDAQ breaking the lows, and it's came back through. You just bought, and you've managed to get a little quick profit into place and a stop at break even. So well done, anybody that just bought the low swing against that prior low there, against that macro value that we were talking about. It has already just paid you some money into your lovely bank account, and that was live in the room. We talked about the buy trade rejection of that 26. It traded a high price of 34, 8 points, another $160 of live room call profits for anybody that can understand what the hell we're talking about. It's beautiful, isn't it? But you see how if you'd bought this, you'd have lost money? Because you made a mistake on your analysis. Because you made a mistake on your analysis here. This was never a buy trade. Never a buy trade. But this was a buy trade. This was an easy buy trade. That's probably the best buy trade we've had today in terms of value, right? Yeah? And all we had to do was find that macro level in the background to lean against. And sure enough, look at it, guys. It's ripping away from the bottom edge. We called it live in the room. For God's sake, what else do you want me to do? Just look back. We called it live in the room, guys. We said we're not buying this price. If we're going to buy it, we'll probably be buying this price here. 26s. 527s. Just traded 550s. Another 23 points. Another $500 winner. Live in the room, guys. Another $500 winner live in the room. So fucking easy, because you're not buying on the way down. As soon as it breaks that key level, you're putting your buy stop order at 27s, aren't you? As soon as it breaks that level, your buy stop order is right in there at 27s, yes or no? That's the rule, isn't it? That was the rule that we gave you for this trade. And look at it, guys. Look at it go. 527s, 577s, $600 of profit off a trade we gave you live in the room before it even happened. Before it even happened, we said we're not buying this one, we're buying this one. We were right, and we were accurate to 1 or 2 ticks on that trade, and there's your target price. number 1. And there's your profit take number 1. What a trade, guys. 580 from 527s. Guess what? 580. 580. $1,000, right? $1,000. It's the SPY VIX. So it's almost the arbitrage line, the SPY VIX. And if you look back at the trades that we've been doing so far today, based on simply a level 2 against a value line, against a macro value line, you can recognize just how glorious these trades have been when they've set themselves up, haven't they? When they've set themselves up, you've made yourself literally thousands of dollars by that one single little rubbishy set of rules, buying a level 2 against a volatility divergence. Who would have ever thought that could have made money, right? It's been thousands today. Thousands. The buy trade here was 900. That buy trade there is just done 1,000. And that doesn't include the buy trade here that did 1,000, the sell trade here that did 1,000, and these buy trades here that did 1,000. You can see it. 1,000, 2,000, 3,000, 4,000, 5,000, $6,000 a contract on that set of rules, guys. $5,000 or $6,000 per contract on that one set of rules. One losing trade. All right, I see that's got a lot of people excited. Not.